All right, good morning, everybody, and welcome to Blackwing Trading. My name is Clinton, and this is my channel. This is a futures trading channel. I trade the S&P 500 futures, sometimes the NASDAQ, NQ, MES, MNQ futures, and I am a Topstep funded trader. On my channel, you will see pre-market analysis and live trades. I want to see the good, the bad, and the ugly. So it may, in the hopes of inspiring you to start this trading journey and let you know that something that is very attainable. All right, I want to jump right into the charts as always on this fine Thursday morning to kind of look at what the market is giving us. And so I am on the 1 hour chart right now, starting from big and then going down to small. We can see that yesterday the market traded up and actually got to some highs after actually over the previous 2 days. It started on 2 days ago with the CPI print on Tuesday. The consumer price index wasn't as bad as many estimates thought they would be. So the market traded up and like that. And then it traded up even yesterday, hit a high at 65.02 and then pulled back to the 64.60 area. And then in trying to trade it sideways because in preparation for the jobs data and the CPI print. The PPI print, which is the producer price index on this morning. And so when the producer price index came out, we saw we had a big drop because the initial jobless claims, the job report was 224,000 jobless claims. And I believe the estimate was 225. And so lots of jobless claims there. And then the producer price index went up as well, which is the inflation for producers, manufacturers, and things like that. So since those numbers went up, it caused a big drop in the market. And so we can see we fell back down to the 64.60 area, and we've kind of been hovering around that right now. So that's kind of where we look at the market's looking at right now. A couple of levels we can look at. So looking at these levels, we were at all-time highs, and so we could draw a line here. I could draw a line here. Actually, let me take this back. Draw a line here at the all-time high, 6502.5. And so we have a known level there, which is the high. But this was kind of, I don't want to say no man's land, but this is our price discovery on yesterday because we were in all-time highs when it was going up this high. So now we kind of know this is a range where the market is going to recognize this in the future. Then we can see since we fell down from the 64.90s, now we're back into this known area, which is the 64.57 through 64.62, 64.60, 64.65 range. And so that's where we're trading at now. As far as lows below that, we could expect somewhere in the 64.40s, possibly even as low as 6,400, 64.05 if the market decides to pull back in that range. You can see 2 days ago before the CPI print, the market opened in that range. So it definitely is a possibility it could pull back into that range. It's a possibility, but we'll see what the market does. We'll always wait for the market to tell us what it's going to do instead of me kind of anticipating what the market can do. But these are the levels to the downside: 64.60, 64.25, even down to 6400 and 64.05, 64.10. So that's what I'll be looking at. If it goes back up, it could hit 6500. I doubt that it would with the numbers that came out with the jobs data and the producer price index, but it is a possibility. All right. A couple of areas of news. We already talked about the initial jobless claims that came out today. And we talked about the producer PPI. There's a big meeting with President Trump and President Putin from Russia on tomorrow, scheduled on tomorrow, talking about the state of conflict, hostilities in Ukraine. So we'll see what that happens there. The market is probably going to respond to that, depending on if there's some news coming out of that. So that's another area of news. And then, but tomorrow also, as far as data, we have U.S. retail sales to see what the retail sales have been in America to see how Americans are spending. We know that we have a consumer and services economy. And so the street is going to be looking to see what those retail sales numbers are on tomorrow. So those are the areas of news that we look at. Those are the levels that I'm looking at on the charts. A couple of things I want to look at, like I always do in the mornings. Since I trade the S&P 500 and the ES futures, I like to look at the S&P 500 top 10. The top 10 companies weight somewhere around about 30% or even more of the total index. And so when we look at the S&P 500, those top 10 companies, if they're doing well, the market is usually going to come up because they're pulling it up. And likewise, if they're not doing so well, they're going to be a dragging force that's pulling the market down. And so we'll start with some of those companies. All right, so we can see, if we look at the long-term trend of Apple, we can see that Apple has been trading up ever since last week. They announced that they were going to make some major investments in the United States. And so their stock got a kick from that. And so they moved up. They were trading, first they were in the 209, 210. They start trading as low as 200. And now you can see they're up in 230s. So they've basically been trading sideways from what they were yesterday. They haven't taken too much of a big hit from what happened there. Broadcom is another company we can see. They had a little dip down, but then they've been trading up as well. Got as high as 318 on yesterday, but now they're leveling it out about 307. Broadcom is a big chip maker. They make a lot of chips in various different types of electronics, routers, computers, cell phones, things like that. And so they're a big chip maker in the semiconductor area. So Tesla, you can see the Tesla's been up and down over the past 2 weeks. They were up a few weeks ago. Started trading down, got as low as below 300, and then they started trading back up again. Don't know necessarily why they start trading up, but right now you can see that they're kind of pulling back. But they're still in the 330 range, which is one of the higher area for them. We got Nvidia. Nvidia's been trading sideways for about a week. We can see they've been somewhere between 180, 181, 182. 183. So they've been trading up in their range for a while, going sideways. They announced that big deal, them and AMD, that they were going to pay the United States 15% of their chip sales to China. And they did that actually to kind of help ease the effect of semiconductor tariffs that the Trump administration was threatening. And so that was a way that they could was a more cost-effective way, I would assume, for them to pay 15% of their sales to China with their H20 chip, and I believe AMD was with their M1308 chip or something like that. But in any case, China is pushing back a little bit on those chip sales, and they actually are discouraging some of their companies from buying them. So we'll see how that plays out. Amazon, largest retailer, they're actually pushing up right now. In the 220s, so you can see if they get back up to this 240 range where they were a couple of week or so ago. They took a dip, and then they had been trading sideways in the 220s, and they're starting to get a little bit momentum. So we'll see what they do. Meta still soaring high from after their blowout earnings report. So they gained like almost $100 on their earnings report a little over a week ago. You can see they had this big move from 690 all the way up to like 770, 780s. They took a little profits over the next couple of days, but bought it right back up, and they started trading sideways around 770. You can see they got to a high of 795 on yesterday, almost broke 800, but now they're sitting at about 775. And then we got, looking further, hold on, let me bring it up here. Got JP Morgan, which is the largest bank in the world. And you can see what they've been doing. They were at a high in the 300s, and they pulled back to like the 280s right now. just to kind of see where they're sitting at. I know that they want to see what's the status. They're depending on what's going to be the status of interest rates and all those other things too. So the banks are looking at that heavily. And that is the top companies that we have. All right, so we're going to go back to the ES futures. And if you're new to me, you know, I trade the S&P 500 futures. And just to go to my screen, I'm actually in a trade right now while I'm talking through this. So I'm kind of looking sideways to see what we got. But we can see I'm in a trade right now. Took a trade and I was down 400. So now this trade is going pretty successful. I'm hoping that it hits my target at 64.70. Actually hoping that it hits that now. That's going to be good. I'm going to raise my stop loss up here a little bit. And it is pulling back, but I'm gonna give him some room to go ahead and go up.
Order filled.
Okay, so put that stop loss in and it hit it immediately. I wish I would have held that in, but so that was a $750 trade. It brought me up to $248 to the plus. And so what I'm gonna do now is wait to do our 15-minute opening range break like what we normally do. So 15-minute opening range break, what I do is I wait for 15 minutes of price action. I trade on the 5-minute charts. And so I allow 3 candles. I block out that area. And then I take a trade definitively either up or down to see which the trend is going to be for the day. And so that's what I take. That's the trade, the only strategy that I use. When you're trading, you don't need 15 different strategies. You know, if you can master one strategy, that's great, and get consistency and learn how to develop edge in that strategy. And so that is what I do. So I'm going to go back to my normal screen, but I am up $248 now. So that's good. A little profit cushion before I take this trade. And we're going to go back to Thinkorswim. And we're going to go to the 5-minute charts as I trade on the 5-minute charts. And we will just allow that 15 minutes of price action. As you can see now, it's pivoting off this area, the level that we identified earlier. 64.57, 64.60 area. Yeah, I'm hesitant to think that the market is going to continue to trade higher like it was, just because of those numbers from the PPI and the CPI. The PPI is important because that producer price index is the inflation that businesses feel. And so if businesses begin to feel inflation, then they take, cuts to their bottom line. That affects the employment. And so we can see that you can have effects in the employment, in the employment sector. And then also with the jobs data, President Trump wasn't too happy about the jobs data from the previous BLS chief. So he, so he fired her and put another one in. But we can see in this week, in the initial jobless claims report, we still were a high number, 224,000 initial jobless claims. And that's an ADP report. But we can see that those numbers is still in sync. They're letting us know that we're not adding that many jobs and many people are applying for unemployment. And so that doesn't look good for the unemployment market. The only upside to that is that the Fed, they have a dual mandate to control inflation, and they also look at the unemployment rate, the jobs employment sector. And so if either one of those things are bad, they do what they need to do to adjust. And so if unemployment is going up and inflation is kind of at a manageable rate, but employment is going up a lot more, they're going to more likely to cut rates. And so that's the only upside to that.
But it is brewed from real tea leaves and real cane sugar for real smooth taste that's worth its weight in gold. Gold Peak Tea. Real is gold. Click or tap for more.
At Domino's, you can get
You see this first candle pulling back a little bit. We had a push right before the market opened, and then now this first candle is pulling back. Lots of selling volume. I do overlapping volume. That's why you see this little shaded thing here. That's the volume coming in. And that lets me know that's a lot of selling volume that came in at the beginning. Okay, look like buyers are trying to turn to green. So buyers are trying to turn that around. We'll see what we get. All right, that's the second candle. After the second candle, and we see the trend, we begin to draw out the caution area. One reason why I picked a 15-minute opening range break is that it allows a lot of the initial price action to settle out. That initial price action that happens in the beginning allows it to settle out, and then you can see what the trend is going to be. Yeah, looking like it wants to trade up now. See, it's going to try to recover some. Like we might possibly recover some of this back from the initial drop. Gonna be coming up on that third candle here in a little bit. Or it look like it's filled a VWAP. All right, I'm gonna get ready to draw out this 15-minute open range break area. See, we got as high as about 64.74. Low is sitting here. All right, we'll adjust that. Adjust it where I can take it all the way to the end of the day.
Order filled.
Okay, I'm in a trade now. I took it a little early. Going long at 64.71.
Order filled.
All right, and that's an $800 and some trade. That puts me up $1,000, and I am done for today. Just like that. I did use larger. I was using larger size today, so usually I'm trading about 3 contracts. This time I traded 5 contracts. So that is more risk, but it's also more reward as well. So I just had to get adjusted, pushing myself a little bit to get adjusted to using the bigger numbers. But we can see there, quick trade, $1,000 in and out, and I'm done for the day. And I'm happy with that, very much so happy with that. And I'm going to be done for the day before 9 o'clock, 15 minutes into the trading day. So I don't know what the market is going to do now going forward. I would assume it's probably going to try to recover some of the range all the way back up to 64.90 or so, or maybe get half of the way and then pull back. I know that it is right now it's trading around VWAP, so buyers and sellers are kind of wrestling to see which direction it's going to go. But I think it may move up some of the way, maybe even to the 64.80s range, maybe pull back some, and people are adjusting what they're doing basically off the data that they received on yesterday. And another set of data, like I said, is going to be released tomorrow, is the U.S. retail sales. And so once those retail sales numbers come out, it'd be a better picture of what they think the Fed is going to do with rates on next month. And so that's why this is important. But in either case, my trading day is done. So thank you if you jumped on. Until we meet again, keep trading and keep starting on this journey of being financially independent.